Welcome to Tesla Daily. Here's a quick look at some recent Tesla news. First up, Tesla's US sales took a hit, dropping 17% in January. Market challenges are definitely playing a role here. On a brighter note, the Tesla Model Y is still leading the pack in Europe. It's outselling its rivals, even with those same market hurdles. In product news, Tesla just launched the Powerwall 3P. It features an integrated three-phase inverter. Pretty innovative stuff. But there are some leadership changes at Tesla that raise questions about their AI and Robotaxi projects. Execution risks are definitely something to watch. Meanwhile, in China, Xiaomi's YU7 has outsold the Model Y, showing that competition is heating up. And lastly, Tesla has been fined $200,000 for some unpermitted battery recycling operations. That's a wrap on the latest from Tesla. First up, let's talk about Tesla's sales in the US. They dropped 17% in January, and that's not great news. This decline marks the fourth month in a row where domestic demand has fallen. It's part of a bigger picture in the EV market, with challenges like the end of federal tax credits and rising competition. In fact, Tesla has seen year-over-year sales declines in 9 of the last 12 months. The expiration of that $7,500 federal EV tax credit has really raised the price of Tesla vehicles, and that's hit demand hard. According to Cox Automotive, the average price of an EV jumped 18.1% to nearly $52,000 in January, which isn't easy for consumers. On top of that, Tesla's brand value has dropped 36%, now sitting at $27.6 billion. This decline, combined with stiff competition from companies like GM, whose EV sales surged by 48% last year, has shrunk Tesla's market share from 49% in 2024 to 46% in January 2026. Globally, Tesla's total vehicle deliveries fell by 8.6% in 2025, marking 2 years of decline. As the company shifts focus to AI and Robotaxi services, its core automotive business faces some serious hurdles. Investors should pay close attention to how Tesla tackles these sales drops and brand challenges in this fast-changing market. Now, let's switch gears to the Tesla Model Y, which actually outsold its rivals in Europe last year. It was the most popular electric car in 2025, with over 149,000 registrations, more than 50,000 ahead of its closest competitor. But here's the catch. Overall, Tesla saw a 27% drop in total EV sales in Europe. They sold about 236,000 electric vehicles there, which is down from previous highs. Volkswagen has now taken the lead as the top-selling EV brand in Europe with a 56% sales increase. Tesla's challenges include an aging model lineup and fierce competition from brands like BYD. Despite the Model Y's success, the overall decline in sales raises questions about Tesla's future. They really need to innovate and refresh their offerings to stay competitive. Analysts are also concerned about Tesla's brand value, which could impact consumer perception and sales moving forward. Next up, Tesla has launched the Powerwall 3P, a new home battery with a built-in three-phase inverter. This is a big deal for European markets where three-phase power is standard. It simplifies installation and could lower costs for homeowners. In 2025, Tesla's energy division saw impressive growth, deploying a record 46.7 GWh of energy storage and boosting energy revenue by 26.6% to nearly $12.8 billion. But they're facing challenges too, including a recall of over 10,000 Powerwall units due to fire safety issues. How Tesla handles its market position in energy storage will be crucial, especially as they focus on international markets where incentives for home storage are still strong. The Powerwall 3P launch is a strategic move, and investors should keep an eye on its performance in Europe. Now, let's discuss some leadership changes at Tesla. As they pivot towards AI and autonomous mobility, key executives are leaving. This is happening at a crucial time when Tesla is facing declining demand for its vehicles. The departure of Raj Jagannathan, a key player in AI infrastructure, and the appointment of Joe Ward as global head of sales indicate a shift in strategy. Tesla aims to be more than just an automaker. But with core automotive sales dropping 17% in January, questions about their business model arise. With traditional automakers and newcomers like Rivian and BYD gaining ground, investors are worried that Tesla's ambitious plans might not come to fruition as quickly as they hope. The combination of leadership turnover and a cooling EV market could create risks for Tesla's long-term growth. Next, Xiaomi's YU7 has outsold Tesla's Model Y in China, which is a significant shift in the market. In January, Xiaomi sold nearly 38,000 units of the YU7, compared to just over 16,000 for the Model Y. This change highlights the growing competition in China, where domestic brands are challenging Tesla's dominance. The YU7 is priced about 10,000 yuan lower than the Model Y, making it an attractive option for consumers. Tesla's sales in China have dropped 45% year-over-year, affected by the end of subsidies and new taxes. As local brands like BYD and Xiaomi continue to rise, Tesla's market share is at risk. They need to address these challenges and improve brand perception, especially given the CEO's political activities. Finally, Tesla has agreed to pay a $200,000 fine for operating unpermitted battery recycling equipment at Giga Nevada. This raises concerns about their compliance with environmental regulations as they expand. The fine comes after regulators discovered that Tesla had been operating this equipment since at least May 2021. While they didn't dispute the violation, it highlights the importance of following regulations. The funds will support Nevada's air quality programs, reminding companies of the need to adhere to environmental standards. As Tesla continues to grow, maintaining compliance will be essential to avoid further penalties and damage to their reputation. They've now been granted a Class 1 air quality operating permit, showing their commitment to meeting these requirements. So, that's a wrap on Tesla's recent developments. Investors should keep a close watch on how they navigate these challenges moving forward. And that's a wrap for today's Tesla Daily Insights. Thanks for tuning in. Just a reminder, this is all for informational purposes and not financial advice. Catch you in the next update.